What's up, my 17 subscribers? I'm finally back with a strategy video. Took a long break from uploading videos just to kind of sort out my strategy and focus on trading rather than making videos. But now that I've got a strategy finally figured out, being consistent, I am ready to make videos again, and I got a strategy coming for you guys. Same strategy I've been using on that $1,000 to $100,000 challenge. Um, let's get right into it. So I'm going to use a screenshot from this week, actually, from the challenge to show you guys my strategy. Well, I trade on the S&P 500 futures. I use the full size contract. Right now I'm trading 6 contracts. It is $50 a point for one contract, so times that by 6, and that's how many it is per point for me. Yeah, I'm going for 10 points, take profit, 5 point stop loss. That's a 2 to 1. And I use basic support and resistance is the foundation for my strategy, and I use a couple of other things with that. First thing I'm looking for in a trade is I'm looking for a pretty decent trend on the day. I look for the reversal that comes around 9:45 to 10:10. If you trade any of the indexes and a lot of stocks, really, there's usually a time where the index or stock tends to reverse in the day, and for the S&P at least, that is 9:45 to 10:10. Usually it'll reverse from whatever direction it was going slightly after the open or during the open. So on this day, you can see it was coming down right after the open for a while, and it just broke into that 945 area, so I was really looking for a reversal. What I see here on the 15-minute chart, if you look over here, I have a resistance level marked out. It just touched that, and I have Keltner channels applied, which show the average high, average low, median. Usually when they touch the bottom or top Keltner channel, they'll reverse, even the median too. You can see if you look back over here where my mouse is, right around 55.70 before, we hit that resistance level and we broke out of that bottom Keltner channel, and then it reversed. Same thing over here a little earlier, broke out of the Keltner channel, hit the resistance level, and it bounced away. So going for that same thing again. It's already done it twice. Usually if it's already done it 3 times, then I don't do it, but this is the third time, so just barely made it in there, because the more times it touches the resistance level, the less likely it is to hold. But it was only the third time, so I felt pretty confident in it. Broke below that Keltner channel, hit the resistance level, and then now I go to my smaller time frame charts. I look for candlestick patterns, because whether you like technical analysis or not, it is a fact that there's a lot you can learn from candlesticks, and they tell you a lot about what price action is doing. So I look at those. I don't really look at chart patterns necessarily, but I do still use that a little bit because it is built into market psychology, and a lot of people do use that. The price does tend to respect that a little bit. First thing I saw when I was going into this trade, so I saw this big engulfing candle. After the big downward move down, we had this move up straight away, and no wicks came below it. It was a strong move up, pull back a little bit, and then we had this big red engulfing candle. So I was kind of not looking to enter. But then we had an even bigger engulfing candle that totally covered this price action. It was a really strong move up, straight into kind of a doji, and I was like, this is a pretty decent sign that it's gonna keep going the direction it was going. I definitely could have entered sooner or waited out this trade even, because it wasn't a great trade anyways. I went ahead and entered. I held it. It did come back to my entry at this point here, but it went to profit, so that was pretty good. That is the basic of my strategy, though. I look for support and resistance. Preferably, I want it to break out of the bottom or top Keltner channel, hit a resistance level, and then have pretty good candlestick action, price action. If you are looking to learn a bit more about candlesticks and stuff, I would definitely recommend Beyond Candlesticks and Japanese Candlestick Charting Techniques by Stephen Neeson. They're great books to learn candlesticks. Candlesticks are useful. They're obviously not magic. They're not going to tell you which direction the market's going just by one candlestick. It's a combination of things. Just gives you information about what price action is doing in that time frame. Gives you a better idea how the market is feeling. And that's my basic strategy. I don't use any other strategies really. This is the only thing I'm using right now. I used to use a lot of different strategies, crazy amount of indicators and stuff, but I've learned that simpler the better. I just got to stick with it. The more time I spend in the chair, the better I'm going to get. And building on that point, I want to go into some quick tips that I can give people who are just starting out. The more time you spend in the chair, the better you're going to get. It's just like a video game. A lot of people, when they play a video game and they're trying to get better at it, they'll get the best sensitivity, new controller, new computer, new keyboard, mouse, whatever, because they think that's what they need to get better. When in reality, the person who's got 100 days played on the game is almost always better than the person who's got 50 days, 10 days played. So the more time you spend in the chair, the better you're going to get at it. And I would like to think of it like a battle royale. A lot of people have to lose in order for that couple people to win. And that's kind of how the stock market and trading is in general. A lot of losers have to win. That's how I like to think about stock market and trading in general. A lot of losers have to be there in order for a couple winners to make a profit. So the better you are, the more likely you are to be in that top 10% that actually win. I think they say 90% of traders fail. I don't think it's 90% of traders fail as much as 90% of traders lose. I don't ever like to say people fail at trading. It's just they don't spend enough time doing it. The more time you spend doing it, the more likely you are to get into that 10% every time you take a trade. It's just like when you're playing a video game and you're trying to rank up, the top 10% of players in that highest rank, it takes you a long time to get there. You're not going to play the game for 10 days and then all of a sudden you're in the top rank, or most players at least. Some people are really good, and stock market is the same way. A lot of people start out trading and they're just profitable right away. So it is definitely possible, but in most cases you're going to need a lot of time sitting, watching charts, learning your strategy, collecting information, building that intuition in your head before you're able to become consistently profitable and stay in that 10%. So the more you trade, the better you're going to get at it. That's just the simple basic facts. And if you're a new trader and you're looking to start out, I definitely recommend starting with $500 at least. Give yourself a good cushion because you're going to take a lot of losses at the start, most likely, unless you're just that guy, which hopefully you are. Start out with the smallest position possible. If you trade the same thing I trade, which is the S&P 500 futures, that's going to be $5 a point. You use the same strategy I use, which you should find your own strategy ideally. It's going to be 10 points, $50 take profit, $2,100 loss. That's pretty decent. Still a lot of money for some people, but you got to start somewhere. And if you want to learn to trade, you got to put some money down. So I would definitely recommend starting with at least $1,000 in your account, but always trade the smallest position until you're consistently profitable. Paper trade first. Paper trade is, fake trading, fake money, no emotions attached to it really. It's definitely not the same as real trading, but it will give you a good start, let you find a strategy. And once you find that strategy, paper trading, then you can start kind of going into that small position, seeing if it actually works for you when the mental is all there and it's real money on the line. I know some people are going to ask what brokers and stuff and what charting service to use. It's all up to you. Every service has different commissions and stuff. I currently use AMP Futures as my broker and Sierra Chart as my charting service. And for stocks, I use Thinkorswim by Charles Schwab. But everyone has their own preferences. A lot of people use NinjaTrader and things like that. NinjaTrader makes it really easy for beginners because I'm pretty sure their brokerage service is all like tied together. It's really easy to set up. Sierra Chart's a little more difficult. And another tip is don't switch your strategy before you really give it a chance because like when I first started trading, for example, I used this same strategy I'm using now or a similar strategy. At least it was the same take profit stop loss. I wasn't really applying the strategy properly because I wouldn't wait for the perfect setup, so I wouldn't hold my profits. I would just get out like halfway, if that even. Usually I would just take a couple points because I was too scared to just let it go. That was also kind of attributed to the fact I didn't start out paper trading. I went straight into real money. So I had a lot of pressure on the line. I felt like I needed to succeed. I wanted to be that guy, but I wasn't. And I had to put a lot of time in before I actually started being profitable like I am now. And because I didn't apply the strategy properly, yeah, I was taking a lot of losing trades, and I was like, yeah, there's no way this strategy is for me. On to the next one. I switched it up. I used a bunch of, like, I went from 10 to 5, take profit stop loss, to 5 and 2.5 points, to 6 points, 3 points. I even did a 1 to 1. I did a 1 point take profit, 1 point stop loss at a point. That was crazy. But at the end of the day, I came back to my very first strategy, 10 point take profit, 5 point stop loss, and it's working out now. I should have stuck with it from the beginning. I just never gave it a real chance. And when I came back to it, I gave it a chance. I waited for the perfect setups. I do cut it short sometimes still because I'm having trouble recently with getting my entries perfect. So I'm usually always cautious about those last couple points at actually being able to get there. And in this case, as you see on the screen, it actually worked out because the market turned around right as I exited. Still should be holding my take profits. So I'm still not even using the strategy to its fullest. I'm not perfect yet. Obviously, I still have a long ways to go. This might just be a good winning streak even. Who could say if I'm even really profitable, there could be a losing streak coming up, but I got a good cushion built up for that at least. I want to also cover my stock trading strategy because I do trade stocks a little bit. Not as much recently because I haven't been finding the setup I want, but I really only use one strategy. Credit to Tony Turner who wrote Beginner's Guide to Day Trading because this strategy was in her book. It's a very old strategy, but it's working right now at least. It works very well for me. Find a stock in an uptrend, make sure it's a good sector and stuff for the moment. Do a little bit of research on the company and all that. Don't just buy a stock off of their chart. Essentially, you find a stock in an uptrend. Make sure its 200-day, 50-day EMA are still going up. Wait for it to have a small pullback. Don't necessarily have to even do that, really. And then you want it to have a green day. Less than 3 green days in a row, but at least one green day and then another green day. And then you want to have a volume spike, like right here. Volume spike, 3 times the volume of the previous day, at least double the other days. That's what I would consider a volume spike, and then that's it. That's all it is. Enter a little bit after the open, wait for it to open and see what it does. You can see here it came down a little bit before it went up. As you can see from this wick right here, that would have been your perfect entry point. You would have seen it come down, not able to close the gap, hit this resistance level, and then start going back up a little bit. That's your perfect entry, and that's the whole strategy. That's literally all it is. I got about a 90% win rate with it, but I've only taken about 10 to 20 trades, so it's not that tested yet for me. But it's definitely worked better than any other strategy I've used. That's the only strategy I'm using right now for stocks, at least. I would recommend if you want to trade stocks daily to find a strategy similar to that. Use volume, use resistance levels. That's what works the best for me. If you're looking to just trade a little bit of stocks but you don't know much about it, it's a good way to grow your money slowly. You could just put about $1,000 into your futures account if you want to be like me and trade futures mainly, and then just put the rest of your money into something like Apple, Google, Microsoft, anything like that, or even just an index fund such as S&P 500 goes up 10% per year on average. Anything like that, it'll slowly grow your money, compounding. It's a great way to just not have your money sitting there. If you have like a 5% APR on your money in your bank right now, like a savings account, it's going to give you better returns than that on average. So it's definitely worth it. And it's a free account from Schwab. That's what I use. Don't use any kind of paid accounts. It's a great way to get some passive money while you're learning to trade. And other than that, it's pretty much my whole strategy. What a day looks like for me: wake up, open up Thinkorswim, check any stocks I want to buy. Usually don't find anything. Open up Sierra chart, and then just wait for that 9:45 to 10:10. Try to find a reversal, and that's that. Leave any questions in the comments down below. I will answer as soon as possible. I will answer any questions you have whatsoever, so put it down. Thank you for watching. Please like and subscribe. Look for more uploads. It took me a long time to make this video. I was having a lot of issues with audio and stuff, so I would really appreciate it if you dropped a like. Thank you for watching. Goodbye.